I think it's one of the factors because it was unexpected. But I think even without the devaluation, we're going to get a market correction because the market has been totally out of sync with where the real economy is.
Your firm predicted a slowdown in China's economy some 3 years ago. What are you saying about the direction of the Chinese economy now?
It's going to get much worse before it gets better. China, all domestic indicators suggest that it is in the bust phase of the business cycle. We are looking at the investment to GDP ratio to fall for the next 2 to 3 years. And on the back of that, growth to slow to between 3 and 5%. And while the deleveraging cycle progresses.
I mean, China's authorities have been criticised for a somewhat cack-handed handling of this situation. Do you go along with that?
I think the policy options are limited. They've tried fiscal policy, they've tried monetary policy. Their options were getting more and more limited. Neither of those have worked really. And now they're going for the exchange rate, a more flexible exchange rate, which kind of makes sense because if you look at the Chinese real effective exchange rate, it's just been soaring, thanks to QE out of Europe and Japan. So you needed some adjustment there because otherwise with the real effective soaring, that means effectively policy is tightening at home.
Yeah. Now, obviously, we're seeing a contagion effect. We're seeing stock markets across Europe and the United States and Japan falling on the back of this as well. Is this, in your view, the precursor to another financial crisis, as some people are saying?
It's certainly not looking good, is it? What I will say is that the outlook for the global economy has definitely deteriorated, which means that the outlook for corporate earnings has deteriorated. QE in the US has come to an end. The next move in interest rates are going to be up, so there isn't that much liquidity to support the market. You can't just have the market rising on the back of liquidity. Now it's back to fundamentals, and the fundamentals are not looking good. So our view is that the summer blues are going to get worse and they're going to extend into the autumn.
Yeah, I mean, what scope do policymakers have to change things? As you say, interest rates are rock bottom everywhere around the world. There's still huge QE going on in Japan, in the Eurozone. US has no room to manoeuvre. I mean, what can policymakers do realistically?
The best thing they can do is nothing. The reason we are in the sorry mess we are in today is because of the QE policies we've had, first out of the US, then out of Europe, and then, Japan before Europe, and now you could say like Chinese-style QE policy. And it's the interference of governments and central banks that is stopping the world from readjusting. The reality is the world has got a massive debt overhang, particularly China, and that needs to be allowed to restructure and consolidate across industries to get rid of the excesses of the boom years. And what you've just had is QE policies that have tried to delay that, and that therefore we've had this kind of stop-start recovery and no firm sustainable economic upturn globally.